Welcome to FP Executive, where we're in the executive suite speaking with Diana Avigdor. Diana is a trader in Toronto for Barometer Capital, and she's here with us today to talk about a career in capital markets and in trading. Thank you for joining us, Diana.
Thank you, John, for having me.
What got you into capital markets and as a trader? What was the first step?
Wow, it's a long story. It started out with starting in university. I wanted to do something that, a part-time job actually, that would teach me something. And started at a TD Bank. And, I thought it would be exciting to work with people and learn about how the system works. And when I started, it really was a little more interesting than I even thought. It would just seemed like a very, very good job, very stable in university. And then afterwards, I ended up wanting to work with people. I wanted to, really sort of help out. I thought it was exciting. Until I started to trade, I didn't realize how exciting it actually was. Every day, I just think of it like a novel, where every page is another chapter.
Right.
You become a little bit of a news lover,
right.
Where you really want to see how things move around and how the news affect all the different moving parts.
Right.
And it really is also a study in human behavior. It's true that economics is what it is, but to what extent does human behavior affect economics,
right.
or does economics affect people? And that's what I learned in university, economics.
So you took economics as your undergraduate,
yeah.
And you're also a certified financial analyst.
Yes.
So you've had quite a bit of background
yes.
in economics, and you mentioned that every day is like a different story. I know we've been going through quite a tumultuous time in the market right now.
Absolutely.
What's it like for you, watching the stocks going up and down, trading on the floor? I mean, obviously, customers are worried about their investments, and you have obviously a large portfolio that you manage. What's it like to be in the midst of this historic time as a trader?
It is historic times. We have not seen volatility like this. I don't think I, in my career, have not seen this kind of volatility. So we need to work with that. And I think that the one thing that you take out of this is that portfolio managers and everybody that deals with client money wants to create returns, make money for people, help them progress financially. At times like this is a time where you want to preserve capital. This is about capital preservation. This is not about making money right now. This is about keeping the powder dry, I think. I think that in these markets, when we're talking about recession, depression, inflation, not inflation, what is it? It's not clear. There's all these bailouts. You can't even follow how many bailouts are going on. And, you need to make sure that you stay solvent through the whole thing, because there's going to be some very good opportunities coming out. We always know that markets bottom when there's no reason to own stocks.
Right.
When there's absolutely no reason to own a stock, that's when we're going to find some gems that we can invest in and really grow with that.
Now, as a certified financial analyst, you talked about opportunities. How do you identify an opportunity? You're looking at the stock market. You're seeing things going down. How do you find an opportunity?
Well, for us, there's different styles, as many people as there are styles. So you can be looking at value stocks, and there's different ways to value that way, and growth stocks and different valuation metrics for that. In our world, at Barometer, we're style agnostic. And so we don't follow a typical style. We will go where strength is. So for example, in times like this, where we're concerned about capital preservation, and we will have a high level of cash, but we will have a farm team where we're going to be watching for relative strength, things that hold up a little better. Not necessarily that they're up in a market like this, but things that are not down 30%. That they're only, when everything else is down 30%, they're only down 5%. So that's a relative strength. And then when the market will move, we will be watching for these to take leadership. And whatever leadership emerges, that is what we're going to look at.
Is there any sectors where you see the leadership perhaps emerging? Or?
Well, right now, our investment, our charts are showing us that relative strength, and again, I'm saying relative, is in telecom, healthcare, some consumer staples, stuff like that. And those are typically very defensive stable cash flow, not so economically sensitive than some others. Even the financials sort of kind of stopped going down.
Now, it's a bit of a stressful time, but is it fun? Are you having fun doing this?
I'm always having fun doing this. Always have. You know, when I started doing this, I thought it was interesting. I thought it was exciting. I thought it was stimulating, and the people that I was working with were interesting and dynamic. But really, after all these years, it's still dynamic and it's still stimulating because, like I said, every day is a new thing. We have never seen markets like this. We have never seen behavior like this. And so, yeah, it's extremely interesting.
So how long have you been trading now?
I've been trading since '95 in equities.
Okay.
And I've done foreign exchange before that overseas. And that was exciting as well.
Now, foreign exchange, are you watching the Canadian dollar at all?
Watching that. And that's one thing that I would recommend to anybody that's starting in the business right now is you cannot be a one asset class person anymore. This is how the world has changed now. Before you could say, I want to only do equities and I'm going to only do equities and I'm going to succeed doing that. Today, as a portfolio manager, as a trader, as an analyst, information is so proliferates so fast and turns around so fast that you need to be multi-asset and across multi-geographies. It's so interconnected.
And this is why the currency part is so important.
And this is where the currency. So you can't be just watching currency. Currency is dependent on the macroeconomics, or then the currency will affect your commodities. The commodities will, now we have futures markets that are active.
Right.
We have stocks that get affected by, so it's not just a stock story or just a commodity story, right?
Now, you've been doing this for some time, since 1995. We are in historic times. There are some people out there who may be contemplating a career in capital markets, working as a trader. Well, what advice would you give to them today who are, folks who, maybe starting university or in university and are thinking about a career? What's one lesson that you would suggest that they should really try to learn?
Right. They need to be technically and technologically savvy today.
Okay.
They need to, we want our central banks to stay ahead of the curve. They need to stay ahead of the curve. Take those courses, educate yourself, and do a co-op program.
Oh, okay.
Right? Try and get your foot in for a temporary stint at some corporation. We love doing it. We've done it at Barometer.
Okay.
It's a great way to learn and to really know what is going on, because sometimes the title doesn't describe exactly the job,
right,
and vice versa. So it's a great idea for young people to just maybe do a 4-month co-op program or 8-month co-op program. It's fabulous for them to tighten exactly what they want to do. I frankly did not know that traders existed when I was in my last year of high school and thinking of what I wanted to do.
Now, you mentioned the technical expertise. Are you talking about expertise with computers, or
yes?
Could you you use charts? You say
yes.
Could
we
you
use charts.
Explain that a little bit
the
more?
charts, the software that you use for technical analysis are pretty much Bloomberg's and different kinds of pre-programmed software that just utilize certain data points, be it volume, be it price, be it velocity, whatnot.
Right.
I'm talking about trading today. Trading in the past, let's say, used to be you pick up the phone, you say buy, sell. Today, you have so many different softwares. You have so many different ways to put out an order, to slice and dice orders, to control price movement and velocity and that sort of thing. You need to be proficient in Excel, for example. Excel has become now a very standard thing, and it has huge capabilities. I could use a few extra courses in Excel, but stuff like that. Those are extremely important things to have on top of the education, the theoretical education that you get.
So it sounds like you need to know about economics, you need to know how to analyze companies and global economic trends, and you need to know how to use the software to bring it all together.
It would be helpful if you use the basic software that you can actually utilize it inside the workplace.
Now, You'll be giving a talk fairly soon, a mentor lunch you're hosting at the Women in Capital Markets in Toronto.
Yeah.
That's on November 4th. If people want more information on that, can they find that at Barometer Capital?
They can find it on our website.
And that's barometercapital.ca?
That's right. There's a link there they can go in, and that will take them to the Women in Capital Markets link, which will allow them to sign up for lunch on November 4th.
Excellent. Well, one last question, because I think people would like to have a chance to speak to a trader. People are investing. What do you say to investors today? Is now the time? Should they be in the market? Should they stay out of the market? What's your advice? Are we in a time where we should be, keeping our cash in the bank account, or is there things that we should be thinking about in terms of investing?
This brings me to what is long term.
Right.
Long term, a while ago, used to mean 10, 15 years,
Right.
before the velocity of information increased like that. I don't think long term is 10, 15 years anymore. I think long term is probably, for most people, 3 to 5 years.
Right.
So that term has probably decreased. So if you are a long term investor, for what I call a new definition of long term, I think that you should be picking away at investment. You may not want to take everything, all your cash, and put it in right away. Buy strength. Buy a little bit of what you think that you would like to own and see if it works. If it works and it moves higher, buy a little bit more. Right. That is our strategy. That's how we buy strength, and we don't buy it all at once. We'll buy as it goes on, and we'll have tight stops. Have a disciplined selling strategy. And that way you keep your losses to small losses if should you not do the right thing. I mean, markets are very volatile. 10% used to be an annual return. We do that in 2 days now.
Wow. Well, it is, as you say, it's a historic time, and I think the advice of one little step at a time is a good one. Thank you so much, Diana, for coming to speak with us today.
Pleasure. Thank you for inviting me.
And for FP Executive, I'm John Turley-Ewart. Thank you so much.